Hey traders, and happy Friday. I hope everybody had a good week trading. So let's go over yesterday and then some pre-market analysis, and that'll help us forecast price today. So yesterday we had a very large gap up as noted here, and the tension was very strong as noted here, and the daily tension as well was the histogram. Daily tension's been pretty strong above zero for about 2 weeks now. So one thing the bulls did yesterday was they waited a decent bit to buy. And you have to think on a large scale here, even if you're just day trading and you have a margin account, that people with 5 million, 50 million institutional accounts, that sort of thing, they're already in. Look, they got positions here, 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 they're in here, they bought here. So they don't have to be super eager to buy. There's no real reason. They're already in good positions, and if they're going to add, it's going to be a position where it's just not going to be eager. They're going to wait. So on a micro level, let's just see real quick what that looked like. And we're going to turn to velocity, and the chart's going to load here for a second. So velocity is this red line here, and it's measuring the momentum in the McClellan oscillator. And you can see they let it hit positive 20. It kind of rejected this positive 20 area, and boom, it went under zero. And as soon as it went under zero, we finally got a new high as noted here. These aren't volume bars. This is measuring how many stocks are making new highs or new lows in the exchange. It dipped under zero once more, and then it never looked back. And you can see in tension that they were affecting it positively the entire time. So that's the tension's broad market structure. So they were in the market and they were affecting the broader market. And you can see when the price was coming down, it wasn't really affecting tension. So that wasn't broad selling or big sellers or anything like that. That was the market searching for buys and sells, and they found some buyers. They just waited. So today we have a gap up. A gap down, a decent sized gap down, which is kind of what we want, right? That's going to release this positive tension. And the expectation is at some point, once tension gets closer to zero, the bulls again are going to find a spot to buy and keep price stabilized. So minus 43% tension, it's a good bit. It can still go higher, but it's still a good bit. But we're kind of going to see most likely a burn-off day with the quad witching, which means you're going to see a lot of low momentum. You're going to see prices kind of reset and stabilize while tension goes towards zero, which is exactly how a proper bull market acts anyway. And you can see on Tuesday, or Wednesday rather, it's kind of exactly what, even though it was Fed day, you just saw tension go closer to zero, stopped, and then it inched back up after the Fed announcement. So it was a good burn-off day. So look, we're still bullish. I expect the bears to come in, the bulls to come in and buy bearish ideas. I don't expect them to eagerly buy, which means I don't expect them to jump at the first idea. So in any event, the only thing that can change my mind about this is if bulls fail to buy bearish ideas. They let tension go to zero, below zero, and they let price go down with it and close much lower than it opened. Then we'll start thinking a little bit differently. But until then, we must think like the bulls, and we have to think like we have a $50 million account, even if you have a small account and you're trading on margin. Because that is going to be the strongest trade with the most context and the best idea. Okay, everybody, I will see you in the room, and good luck trading.